Good afternoon, everyone. Welcome to LAT's weekly market insights. Now, as we have a look across the calendar, pretty bare economic calendar, we look to the inflation numbers on Wednesday as the main source of entertainment. Now, if we look back to last week with the stellar non-farm payrolls, jobs report out of the US, it does bring these numbers ever more into focus. Now, as we look across the month-over-month figure for July, expectation for 0.4% did come in at 0.3%, meaning a slight miss on expectations. Now, as we look across the year-over-year figure, it comes in market expectations were at 4.3%, but it did come in 4.3% as well, so we were bang in line with markets expectations. Now, with the Fed still pumping $120 billion of stimulus into markets each month, with inflation as high as it is, with the jobs report as good as it was last week, it does bring the taper talk into focus in the coming weeks ahead, and it's something we are going to have to monitor very carefully. Now, with a slight miss on expectation on inflation on Wednesday, we did see quite a negative reaction off the back of this for the US dollar. Now, we did initial spike lower, we did have a pullback, and we've had continuation of that move lower today, meaning that the market's fear of tapering has slightly cooled somewhat. It still will happen at some point. It's not a question of if, it is a question of when, but by how much is what we'll have to look for going forward. Now, as we look across other markets, we look to the S&P 500, we look to the Dow Jones, and we look to the DAX. Now, it's quite a remarkable rally that is continuing. We continue to make all-time highs nearly every day that we look at markets, no showing no signs of slowing down. And as long as these charts keep going up, keep making higher highs and higher lows, and tapering isn't talked about too much. Even if we do get some tapering, $120 billion of stimulus being pumped into markets each month, even if that is reduced to 80. If you had said to us 2 years ago that there would be $80 billion of liquidity being pumped into financial markets each month, you would take that as a big, big positive for equity. So when will this rally stop? I don't know. We'll have to keep up to date with the news, up to date with the charts, and wait and see. But for now, fundamental bias, technical bias, everything's still pointing upwards. So you would imagine that this rally will probably continue for a little while yet. Now, the difference here is looking over at the Nikkei 225 Japanese stock market. The Asian benchmark is lagging behind its US and EU counterparts, not just the Asian benchmark, as in the Nikkei. Asian markets across the board are struggling at the moment for a couple of reasons. One reason is the pandemic situation. The Delta variant is rampant across Asia, causing increased lockdown measures, increased restrictions across countries all over Asia, which is negative for growth, negative for inflation, jobs, everything to do with the economies. The other problem is to do with China, with their widening regulatory curbs being implemented over the course of the next 5 years. The country has said during the week that they would be implementing this for the next 5 years, and also that the reason for this is to fight rising income inequality and to encourage consumption, making it possible for more economic growth into the future. Whether that happens or not remains to be seen, but we will keep an eye on it over the coming years to see if it can do what they say it can do. Now, as we look across the Bitcoin, we've had a real solid bounce off the 30,000 level when we touched down here after a massive sell-off across the board in cryptocurrencies. We've had a massive rally, but in terms of a bit of crypto news during the week, I don't know whether many of you are football fans watching this. I know I certainly am, but I certainly am. I mean, they have also been, strengthening across the board, across all cryptocurrencies. But Lionel Messi, some would say the greatest footballer of all time, has moved from Barcelona to PSG, Paris Saint-Germain in France. Now, as part of his welcome package, he did receive between 25 and 30 million euros in tokens, in fan tokens, PSG's own cryptocurrency. Now, this could be seen as a bit of positivity off the back of this, due to the fact that it's such a famous footballer, such a famous football club, a big move that worldwide people will look at. and there is 25 to 30 million euros of cryptocurrencies being passed over as a form of payment to Lionel Messi. Now, make of that what you will, but to me, that sounds like a pretty positive thing for people hoping that cryptocurrencies will be used as a form of transaction in the future going forward. Now, as we bring us back to the calendar and we will swap over to next week, a bit of excitement out of next week, we should see the Reserve Bank of New Zealand to hike rates by 25 basis points, being the first G8 central bank to hike rates post pandemic. Now, they are expected for another rate hike by year end. Unfortunately, this move is probably priced into markets by now, but the fact that they are the most hawkish central bank, is a positive for the currency, and we will have to see how that can play out going forward. We will see that on Wednesday. The main situation, the main thing we will be looking for around this statement, around this interest rate decision, will be the forward guidance on future tightening. Now, as I said before, this move is probably very well priced in as it's happened ahead of time. Markets have been very aware that this is going to happen in August for a number of weeks, couple of months now, but it will be interesting to see how much further gains can be realized in the New Zealand dollar over the rest of the year. Now, that's all from us this week. Please do join us again next week for another weekly market insights.